Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference, and joining me for this segment, we have Christian Magoon. He's the founder and CEO of Amplify ETFs. Christian, it's great to see you, as
good
always.
to see you
I think
again.
This is like our 5th ETF conference
I
together.
know.
The transparency, flexibility, the growth of ETFs.
Yes, ETFs just keep growing. So they're 30 years old. They're older than us. And why is that? Efficient, tax efficient, cost efficient. They're transparent. You know what you own at all times. And they're flexible. You can trade in and out during the market day. You don't have to wait for that end of the day NAV. Very important as markets fluctuate. So those characteristics, I think, have created this really nice uptrend of growth for ETFs. And I think it's going to only continue. Mutual funds are still larger than the ETF ecosystem. And these types of corrections or market turbulent events end up benefiting ETFs because of those advantages we talked about.
And I also think you get the innovation.
That's right.
That is coming with the ETFs. I mean, there are so many of them, but I think we're still at the tip of the iceberg with what's potentially there.
Yeah, that's right. When I first started in the ETF industry, I launched a firm called Claymore, which was 14th sponsor. And I had a reporter say, 14th, aren't you late to the game? And we knew there's a couple thousand mutual funds that are out there, about 7,000. So now in the ETF space, we have about 3,000 funds. So, we could double and still be smaller than the mutual fund space in terms of selection. And as you said, innovation is what's driving the ETF market, new strategies, new market segments, and it's really exciting because it's opening up new asset classes, investment strategies for all types of investors. Used to be many of these areas were only available for institutions or high net worth, so that's pretty exciting, the democratization of investment themes.
And it's interesting hearing a lot about international opportunities. We weren't talking about that the past couple of years, but hearing a lot about it now.
Yeah, we saw a great year for international last year, outperformed the S&P, the MSCI EFA by 500 basis points. Year to date now, we're seeing that outperformance continue by about 200 basis points. So we think international is something investors need to look at, not just for diversification, but also for alpha. Right now, when you look at international stocks versus the S&P, you're seeing a historic 20% discount of their PE relative to the S&P 500. So even though they've outperformed, they're still relatively cheap when it compared to US stocks. So we think that's an area for not only value, but alpha. And we're seeing a lot of flows into our enhanced dividend international ETF, IDVO.
Tell me about that strategy.
Yeah, so IDVO is an actively managed product that buys blue chip companies outside the US and then tactically writes covered calls. So you get income from dividends from those blue chips, but you also get option income. So yielding about 6% on an annualized basis, pays out on a monthly basis. We think this is kind of a great way to get your toe in the water in international, to not just bet on total returns, but get that 6% income. It's an actual sister fund to our largest ETF, our DIVO ETF, D-I-V-O, our enhanced income, which is just US focused. About 5% yield on that, so you're getting a little bit more yield going overseas, still staying in the high quality segment. In
the overseas fund, what's an example of a company or sectors that you're investing in?
Yeah, so one example is KOF, which is Coca-Cola, which sells Coca-Cola in South America. And if you're in Mexico or you're in South America, that's where you're buying your Coke, your water. It's a high quality company, blue chip, pays a great dividend yield, and that's like one of the top holdings there. So these are names that you'd recognize, but usually they're outside the US and kind of international versions of domestic companies like a Coca-Cola that we know in the US. So in terms of asset allocation, very broad-based, very S&P-like, except less technology and communications. So a little bit more kind of blue chippy in nature, which excludes a lot of the high-end growth companies that are found in the technology and communications area.
All right, Christian, great to catch up with you as always.
Good
thanks
to see
for joining
you.
us on Trade
Thank
Talks.
you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.